Okay.
Hi, Bri.
Hi.
Thanks for joining me. In today's topic, I really wanted to talk about next year's sort of market trajectory, what's happening in the Treasure Valley. This year was kind of wonky with rate volatility and tariffs and politics and everything. As we enter 2026, I think affordability is on everyone's mind. That could mean something different for everyone, but essentially how to be really strategic financially going into next year.
Yeah.
So we're going to talk a little bit about what the predictions are, what you've experienced this year, and maybe how future buyers can be smart.
There's
and
so much.
financially strategic. Yes, thanks for joining me. Okay, so a little bit about Bri. You've been a broker since
Our company's been in business
Okay.
since 99.
99.
Mom is the broker owner, so she's been around a hot minute.
I love that. And
Yeah.
you're coming up on 25 million this year?
Hopefully.
Yes. Which is
Yeah.
such a boss for being a small team. I think that's incredible. And
Yeah.
you're a mom and just navigating all of that. So what I love about Bri, I'm just going to hype you up for a second because I've worked with you several times. What I love about Bri is that one, you used to teach compliance. So I feel like you really understand the rules and you have an internal need to do things ethically. I think you've been really wonderful, especially with my first time buyers, in being patient to explain the process. I think you have morals to you that just prevent you from hiding extra fees or anything that could possibly, I would say, hurt the transaction or, just giving my clients the best possible deal they can.
Yeah. The best part about a broker.
Yay!
Low
I
fees,
know.
low costs.
That's actually where we could kind of start. A lot of people do get a little confused on just the general idea of a broker versus a retail lender versus a bank.
Yep.
Explain a little bit about the differences.
And even with my realtors, it's like you want one from each main category, right? You have big banks, which is, Banner Bank, ICCU, wherever you bank at generally. You have retail lenders. So those are like the big box lenders, Summit Funding, Guaranteed Rate, Loan Depot, those kind of lenders. And then you have mortgage brokers. I'm a mortgage broker and I'm an independent mortgage broker. So I'm not affiliated with any of these like larger scale companies out there. You Mortgage, Barrett Financial, those are considered brokers.
Okay.
But they've almost like redesigned the model and have taken away like the true point of a broker, which is to keep your rates and costs low. Because essentially with these bigger companies, okay, they have a production manager, they have a sales manager, they have an operations manager, they have operations staff. They generally have a big building, all of these people working there, and who is paying the cost, who is actually paying their salaries.
Right.
It gets passed on to the buyers, unfortunately, and that's through the interest rates. So if you don't understand, which the general public really doesn't understand how the mortgage rates work, that's why you'll see variations in rates when you go shopping from, a bank to a broker to a retail lender.
What would be one thing that possibly brokers maybe have, let's say, a disadvantage or where things could go wrong and how you sort of help? Because the brokers are the middlemen, right?
Yeah. So essentially, I have wholesale companies.
Yeah.
And I shop each one depending on the client, the product, whatever it is that they're specifically trying to do. I think the best argument I've heard from retail lenders and banks is that brokers don't have control over the loan process because these aren't my in-house underwriters. They're not my team. I'm not paying them. I've never run into a problem getting something done and getting it done quickly. Personally, I've built my business based on relationships. My account reps that I have at these different wholesale lenders are people that I've known since I was like 8 years old. I have a really good foundation with them where I can pick up the phone and say, I need this done and I need it done today. I haven't had that issue. Not saying that that's not an issue for other people who are maybe newer to the industry or doing less volume, who maybe don't know as much about mortgage and are just kind of out there throwing loans together.
Right.
So I could definitely see that being a problem.
Right.
I've been able to mitigate it.
Yes.
So far, I haven't had an issue. So
yes, I love that. There's been several times where I just can be like, do I need to worry about this? And you're like, nope, I got it.
Yeah.
We're good. We're good. Okay, so let's dive in to a few things. One thing I'm seeing on the real estate side is specifically, let's just say Zillow or online shopping with agents or with buyers. And usually when they start the home journey process, they're just looking online. There's a few interesting and unique things about Idaho. One, it's a non-disclosure state. So a lot of that sold information is not being given. Zillow doesn't always have the full sold information. For me, what I'm seeing is how that affects buyers is one, seller concessions or credits are huge here. So whether it's a seller trying to price their home and I'm thinking, great, your neighbor also had to pay out $15,000 at closing. So that does affect the value.
Right.
Or if you're a buyer, all you really see is maybe some basic days on market, or you'll see the price drop. But again, you're not seeing all the terms and the concessions being had. So maybe give me some insight on some recent transactions you've had or where some of those numbers start to play out.
Well, and that's the best pitch to hire a realtor right there, right?
Yeah.
Like people trying to online shop. I see a lot of people who go directly to the builder and they
Mhm.
don't have their own representation.
Yeah.
And I mean, I don't think that there's many builders here locally that are out to get people. I think they want to sell inventory and, make their bottom line where it needs to be, obviously. But how are you getting the best representation for yourself if you don't have somebody arguing for you as a
Mhm.
buyer? And again, most people don't know. I might be able to go do it. Sure. I can go to a builder and say, no, you're going to pay this and I want
Right.
A, B, and C.
Yeah.
The average person isn't going to know to do that. There's a large local builder who has preset seller credits online. Anybody can
Mhm.
log in online and see, if I buy a house at this
Mhm.
price point, I'm going to get this much money back. That's still negotiable.
Yep.
Okay, so you're at minimum going to get that, right? But can we get a new fridge on top of it? Can we get more money? I mean, the seller credits are great right now for people because lowering the price point versus buying the rate down, there's a much greater impact for people in the monthly payment by buying the rate down.
Yeah, let's talk about that a little bit. I definitely want to dive into new construction, but let's just talk about price point versus seller credit because this is really common. And I would love to get more specific numbers with you on how that affects maybe a monthly payment. For example, the sellers can emotionally still get their price point that they're asking for.
Yep.
I find that it's usually better deals can happen. The sellers are more agreeable where they can say, sure, I'll kick you some money back at closing versus you want me to lower the purchase price. There's just an emotional aspect to that.
Yeah.
But just specifically talking about the lender side, where what would it look like to, let's say, lower $10,000 on a purchase price versus give $10,000 at closing?
And I don't have my calculator, so don't hold me to
Yeah,
exact numbers here.
ballpark
But and it obviously it depends a lot on like the loan amount and the interest rate at the
Absolutely, yeah.
time. That is a huge factor here. But I tell people about every $10,000 that you're financing is about $60 a month to the payment.
Okay.
General rule of thumb, within $10
Sure.
there. And then let's say we get the $10,000 back as a credit instead. Okay, well, if I can buy a rate from 6.25 to 5.5, that might have $100 difference in the payment, right? And
Yeah.
you're still taking the higher price point there too, right? So you're washing that 60 and still saving money by doing it that way.
Yes. I love it when you just crunch the numbers. It's so
Yeah.
good. Okay, so other than closing credit, what are some other examples or situations you've been through that getting more into the detail of the terms of the contract really affect the monthly overall?
Well, I just had one in California where my buyer goes into contract. They were told that the solar panels on the home were already paid off.
Solar,
The
yes.
solar was paid off.
Oh gosh,
and
yeah.
then we get 2 weeks in and all of the inspections are paid for out of pocket by the buyer. And we found out that the solar panels were not paid off. And so it kind of puts us in a weird situation because the agents want to make it right. And that agent came back and said, well, we'll give you a credit. We're just going to give you $10,000. I already had a credit of, $7,000, I believe. And then on top of this, they found repair issues that they wanted to give a credit for.
Okay.
And the way I had the loan structured, you can get different amounts of seller credit based on the loan type and how much, the client is putting down. In this situation, the client could have taken all of that, but it didn't make sense. And we didn't have enough cost to the loan to even do it that way. And his loan to value at that point where we originally had it structured, he was, financing 50%. So we had an appraisal waiver, all the things everybody loves right before Christmas, everything. So then they call me and say, well, here's, $29,000. And it's like, what am I going to do? For him, it didn't make sense with his longer term plan to buy the rate down that way. It would have been a waste of money for him. So we go back, we restructure the loan. I have him put, instead of 50% down, he put 5% down.
Okay.
We then bought the rate down. He was taking higher interest rate before to get a little bit of a credit back, a rebate on the rate to help cover some of the closing costs. So we took his down payment to the lowest possible, and that limits our credit at that point to the 3%. So we changed the purchase price. We lowered that down about $10,000. I took the max credit. We bought his rate down, covered all of his closing costs, and the payment was still lower than originally at the 50% with the higher rate. So it worked out for him at the end of the day to be able to, obviously we lowered the purchase price there a little bit and used the credit, but to be able to restructure that in a way where the payment is still, it was lower only by a few dollars, let's say, but it was still low. And now he has, $40,000 in cash in his pocket at the end of the day to make all of those repairs, the solar, all of those things.
Yeah,
because
solar is just something that it's so funny because I feel like buyers, when they see solar, they think, oh, that could be a great feature to the house. And people in the industry are like, oh, that could be a big deal in a negative way as far as it could possibly hurt the transaction.
They add no value to the home. Everybody thinks they're adding value to the home. Ask any appraiser. They add no value to the home. So,
well, it props to you for. I'm assuming the close happened still on time. Okay.
Yes.
Oh my gosh.
We closed. It was. We did extend for about a week, but that was due to the listing agent's misinformation. Because this particular client, he's a great guy. I used to work with him, firefighter. I used to dispatch for, but he's not afraid to walk away from a deal, which is great. Like he's very educated, so we were able to
save it.
Yeah, to get him in the home before Christmas.
That's amazing. So. One thing I did want to mention, since we were on the sort of the Zillow talk and essentially people not getting all the information, one thing that I think is really happening specifically in this market, and I think will carry on through the rest of the winter at least, is the days on market and then the delistings are increasing. So sellers are not getting the prices they want. A lot of sellers who are trying to sell right now, they purchased their home way too high in 2021. So I think sometimes homes are being priced a little on the higher side for maybe what the market's calling for, because a lot of sellers really want to recoup their cost. The problem is then it sits. And one strategy a lot of agents are doing is they are now delisting and then, let's say, relisting in the spring, because that can reset days on market. So I'm finding how this affects buyers is, again, if they're looking online in Zillow, maybe they see what's a new home on the market for 0 days. I, as an agent, go and look at the detailed history and say, wow, no, this property has had a lot of days on market. Maybe it went into transaction, then it came out of transaction. What that tells me is maybe the sellers are more willing to negotiate. Maybe they're a little bit more desperate. Maybe more deals can happen. So that type of sold information is just not something that people are having access to that can make a huge impact on how a deal is structured. Before we move on from the talk of seller credit, I do want to dive a little bit more into what it all can be used for. Super commonly can cover closing costs, and it can do a rate buy down. I know my last buyers, they had $13,000 at closing, and they had maxed out how much they could essentially use the closing credit towards the loan part of it.
Yep.
And they had $2,000 left over. So I learned through that transaction that now there's new ruling in which you can also do some servicing on the home. So they were able to get an HVAC servicing. But that, my understanding, is a fairly recent law change. So my question is, what are all of the unique ways that people can use seller credit?
It's called interested party contribution on our side. So those are set guidelines. When I have people going into transaction where I know it's a seller credit, I have that conversation with the realtor. This is your max amount. Unless they want to put more down, whatever it is, this is your max amount. So if you get more, like you said, okay, what
can we do?
Right. And that's more of something that you guys would handle on the side without the lender involved. So whatever type of servicing, and if they're going to invoice it at closing, just pay it out, those kind of things. So for us, with the interested party contribution, we can use it towards, like you said, the rate buy down, the title and escrow fee. It's like every fee that's associated with completing the loan. All have maybe a couple $100 fluctuations sometimes. We can get pretty close to exact amounts. But if I have, $500 left over, okay, I prepay taxes, or you can prepay HOA dues, where it's like they're not getting the instant gratification maybe, but you're not going to get an HOA bill, until 2027.
That's great because HOAs are huge here
Yeah.
in the Treasure Valley, especially like
Yes.
Meridian and more
Yeah.
new construction areas. So that's great. Okay, so HOAs, prepay taxes, some service jobs on the home. I know there was certain rules around that. It had to be, something that's attached to the home, so like HVAC, roofing, but you couldn't necessarily take anything on the inspection report and get it paid for.
Right. And that comes into the whole interested party contribution for us on our side. We can only show so much credit on our side. So if you're having the seller who's paying for things before closing, I've never had an issue there. So
we'll just leave it at that.
Yeah.
Okay, so moving on for a second from seller credits, one thing I wanted to talk about is essentially the idea of the amount that you're pre-approved for, which is the common number, and then what I often advise clients, which is what is your own personal budget monthly? And we can kind of dive into monthly and debt consolidation and all that. I find that people tend to sort of gravitate towards one number or the other. For example, I was telling someone at an open house that I think that they should talk to a lender and actually get that pre-approval number to see realistically what their finances actually qualify for. And there was just this immediate, no, like I know what my monthly is. Like I'm not going to let a lender tell me what my monthly is.
Yep.
I think that there's kind of a lack of understanding that you need both numbers, right? You need to understand your own personal financial situation, and you might qualify for a lot higher than what you're even willing to pay monthly, but you need to have both. The one doesn't replace the other, right? So your pre-approval is essentially up to your max amount of what we can even shop for, and we can go down a rabbit hole with that. And then there's what's your financial budget? Didn't know if you wanted to talk a little bit about that and maybe some ways that you've been strategic to help people see kind of the bigger picture when it comes to their monthly.
And I think that's the best thing is like, okay, I know this is the max amount I can go to, because if you get into some sort of negotiation and either I'm not available or whatever it is, where you can't get a hold of me right away and you're trying to say, well, can they go up to this amount? You already know. Like, I'm going to tell you this is hard stop point of where they can go. So getting a pre-approval, I think most people are scared to do it because financials are stressful. And I think for people to actually sit down and look at like what I'm spending money on, that's, even for me, that's stressful sometimes. Like just looking at everything and they're afraid that you're just going to pull their credit. And a lot of people don't want you doing that, which I understand. I try to talk to the client as much as I possibly can, get a feel for the general situation. There are some people where I say, we need to pull your credit right now. There are other people where I'm comfortable saying, okay, once you identify the home, let's pull your credit, and I'm seeing more and more, I'm leaning towards let's go ahead and just pull your credit.
Yeah. Well,
in this economy, especially.
I agree. And as an agent, things happen so much faster than you think. Because like clockwork, people come to me being, I think let's start the search, but I'm not really in a rush. And then you find the home.
And those are the people
so
that are
fast.
rushing.
And then it's, oh shoot, there's already an offer. Let's get our offer in. Oh shoot, we don't even know if you qualify. So for me, being as ready as if you were to find the home today, can we put an offer? Like, are we just even logistically lined up to do so?
Right.
So I think it is great. Obviously, people are concerned with the pulling the credit idea, but
yeah. And I mean, most people don't, they just think, oh, I make this much money. This is my pay stub. This is, I can afford that. But what they don't realize is there's so many nuances on our side of like, I might not be able to use that income as qualifying income, right? Yes, you make it, but if you've only received that overtime, for the last year, whatever it is, that number looks a lot different. And a lot of times with variable income, which is like an hourly employee, and if they're not working exactly 40 hours, that comes into play. So they think, okay, I make really good money. I'm going to go buy a house. Okay, that's great. But have you been on that job long enough?
Right.
Like variable income is very different. And I run into that a lot with people too.
Oh,
That's
I know.
the biggest one.
My poor agent, when my ex-husband and I moved here about 5 years ago, we had sold a house, so we had a chunk of money. So I think we did some calculations in our head of like, yeah, of course, if this is 20%, we clearly can get this much house. I think for 2 weeks, we saw houses with this poor agent. And by the time we found a couple, we realized we're like $100K off. Like we weren't even close. So I felt so bad. So now that's definitely something that I tend to put my foot down, is that I kind of gauge it. And if I feel like it's a pretty solid, they seem very confident in their finances, okay, let's look at a couple houses. But if they're getting kind of close, I typically say, hey, have you talked to Bri yet? Because
Yeah.
I don't want to waste anyone's time,
Yeah. Well, and that's the hard part too, because I can't pull somebody's credit without their explicit permission, right?
Yeah.
So I recently had somebody that did that. They said, well, I just paid down, these 3 credit cards and I want to let it cycle through to improve my score. Okay, that makes sense to me that you're saying that. So then I go into a detailed, okay, have you had bankruptcies? Have you collections, chart, like any of those things? I get very in depth with certain people, and it's always something that comes up that people aren't even, okay, he didn't make a mortgage payment on time for 6 months.
Mm-hmm.
So it's become, I think, more relevant, I would say, in the market that we're seeing, just with jobs and everything, the economy, how it's going, a lot of people living off credit cards and
Yeah.
all of those things. I just think, and for you, it's like you're not paid hourly. For agents, you don't want your time wasted. You could be applying that somewhere else.
Yeah.
You could be finding another deal, whatever it is. So I try to really urge people to go through the full pre-qualification process.
Yeah. I think it's a beautiful thing. Even if you find out you're not even really qualified to get a home, or at least the home you want, then you can say, great, in 6 months, let's check back and try to get your credit up to this. Like you can have that specific, concrete, detailed plan, and you just can't get that unless you've actually gone through the whole process. And then let's go a little bit more into the whole idea of credit card bills and monthly debt. What are some ways that you've been creative with people in today's market and how to utilize the home buying journey, or essentially how to move numbers around to help them?
I mean, my favorite is a VA loan, because you can actually use the seller credits to pay off debt. You can use, it's the only loan that'll allow you to take money from a builder or from a seller and pay off a credit card,
That's great.
which is great.
Yeah.
VA is great. If you can qualify, that's the best loan product for those people. The other part of it is people generally don't think about their debt as an overall like monthly picture. They're just so focused on what the mortgage payment is. And they have this idea in their mind of, I'm not going to go over $2,500.
Yeah.
Right? Because they're thinking about, well, I have to pay this bill, that credit card,
Right.
all of these different things. And what they're not looking at is the interest rate for your other debt. I mean, I've seen people who owe $10,000 on a vehicle, but the payment is $600 a month. So it's like, okay, let's put less money down, changes it about $60 a month. Let's put less down, but you're going to save $600 monthly to try to change people's perspective that way. Because I think there's a lot of people who probably aren't buying homes because they think they can't afford it with their overall monthly debt versus, okay, you have this amount saved to buy a house, but how can we allocate that to put you in the best position possible in your overall monthly debt?
Yeah.
And alleviating people of high interest credit cards right now.
I love
It's
that.
huge.
That is like so powerful, because that is in the topic of how do we financially survive life right now going into 2026. The fact that you can do a home buy and actually financially position yourself even better, maybe get you out of that car payment, get you out of credit card debt, and get a home.
Yeah,
So
and I've
that's
seen a lot of people who
so good.
either they'll end up, deciding they can go up in their payment, or they keep it at the same, and now their overall monthly debt is even lower after they've purchased a home.
Currently in today's market, what would you say is the most common buyer right now? First-time buyers, move-up buyers, downsizing?
A mix probably of everything. But I see a lot of people who have purchased their first home during COVID when it was super affordable, obviously, to do so. And, since then they've had children or got a dog, whatever it is, and they're kind of looking to go the next tier up in home.
So those people must be having a hard time between having the COVID rates, but they want a different lifestyle. They want a home and having to make that decision.
Yes.
Do I sell the home?
Yes.
Especially in today's market with it being pretty tough for
Right.
sellers. And also this emotional idea that ideally you want to hold property as much as you can, but that doesn't always make sense.
Right.
So that's a great example because I think a lot of people can relate to that. You already own a home, you already have a killer rate, but you don't love it anymore. You want a new lifestyle design. How do you help people decide whether to turn into a rental, whether it's actually maybe the right time to buy or to sell, or, how do you help people navigate through that?
A collaboration with the agent, a lot of collaboration with the agent because I want to see, okay, if they were to sell this home, how much are they going to net at the end of the day, right?
Mm-hmm.
And renting it, most of you are able to, I think every agent can do this, go online and look at the rental comparables and say, okay,
Mm-hmm.
they can get this amount for this house. Okay, if they bought in 2020 before the big boom happened here, really, because I would say that was more 21 when it got super crazy, the end of 2020. Having people who have a $1,700 mortgage, but they can rent it for 2,500, whatever it is, right? Like there's certain scenarios where it would make sense for them to maybe have a renter come in. And that's kind of your foot in the door to investing in general, right? You start with one and you kind of keep moving along and into a new home. The other main factor that though is, do they have the cash
Yeah.
to buy the next home? If they bought their first home with an FHA loan, anything like that, they would obviously be looking at doing, depending on circumstances, a conventional loan. You need 5% down when you're not a first-time buyer. So can they have the ability to come up with that 5% without touching that mortgage? Because then when you start looking at that going, okay, yeah, we want to buy this, we want to do it. What's the best strategy? Okay, we could do an equity line, right? So we're leaving that mortgage as is, pulling a second loan to pull the cash
Mm-hmm.
to purchase here, but can you afford that additional payment there, right? Of the equity line. If that adds $500 a month, are you making up the difference with the rental income? Maybe. It might wash it, and
Right.
that makes sense for them to do. A lot of people, I think, mostly agents kind of go straight to, oh no, rent that and then buy something
Right.
else.
That's just what you do.
Yeah, that's just
Yeah.
what you do. And it just, you guys don't see the other side of it. They might have credit card debt
Yeah.
that you don't know about. And you see this house that has, equity and it's a great rental and you're going to make this much. That's great. But what if they just sold that and took the cash, got the home that they wanted, put enough down to get the payment where they need it, and then paid off all their debt?
Right.
That's putting somebody in a better position than just saying, we'll just rent that out and then buy something else.
Right.
So you need to be a little bit more, I would say, strategic and understanding of overall financial picture versus
Right.
like what we're just told to do.
Right.
So those are two completely separate
Yeah.
things.
I definitely love that. I'm always just so, anytime anyone asks me a question about anything, I'm so like, have you talked to all the experts and crunch the numbers? Like, I
Yeah.
can't give you an exact answer on what you're supposed to be doing right now until you've actually looked into everything. And I think it can feel a little overwhelming on the debate of whether to sell or not, because you also have all the factors of, well, how much did I save this year on taxes by being a homeowner? How much did I write off because my office is in my home? Like there ends up being so many little numbers.
Mhm.
What would I have to repair in my home in order to even get it ready to sell? How
Right.
much does that cost? And so, yeah, like that the more detailed of a breakdown to get a really realistic number, you're going to have to work with an agent and a lender, even a financial advisor,
Yeah.
even a property manager. Like you're going to have to pull in the whole team to really break down those numbers and make that type of important decision, I think.
Yeah. And it goes back to, I think, the mentality part too, of this is what you're supposed to do.
Right.
And it might not make sense. I mean, I didn't do that with my first home or my second home. It
Right.
took me the third
Right.
to be in a position of, okay, now we're comfortable. We're going to pull some money from this house, keep it as a rental, and then move into the house we want, right? So it's like
Yeah.
that instant gratification. It might not make sense on your first home. It
Yeah.
could. You just have to really understand all the numbers. And even here in Idaho, a lot of people don't think about the property taxes. We have that exemption. So when you exit that home, your taxes go up, your insurance goes up. So they don't factor that in when they're looking at, this is what I can rent it for.
Right.
And then that happens and they panic.
Right.
So there's a lot of different things where you need to have experienced people to help you through that.
Yeah. Okay, let's dive into a topic that I think is pretty unique for the Treasure Valley. We are over 50% inventory new construction. So the chances of working with the builders pretty high,
Yeah.
especially with all the relocation clients coming in. So walk me through how it might look differently between a resale home versus a new construction ready to move in home versus maybe a custom build home. What are some differences in the loan process that could happen?
Well, the first thing I've noticed here is that all of the builders have their preferred lenders,
Mhm.
right? So they'll say, we'll give you X amount of money, but you have to use this lender. It depends on which builder you're going to. Some give choices. You don't have to do that. A lot of people feel like, oh, I have to use
To
their
get the
lender.
deal.
No, you
Yeah.
don't. I mean, I have had people where, they're offering $10,000 and then to use their lender, right? And
Yeah.
then nothing if they wanted to use me. But
Mhm.
when you compare, I'll have them get the quote and compare it side by side. And it realistically, that $10,000 is just buying the rate down
Mhm.
to maybe not even where I'm getting the rate at.
Mhm.
So and not every builder is doing that. The majority are. The in-house lending, in-house title, that's all affiliated with the builder. Obviously, they're making more money by having you use every piece of that for them.
Yeah.
So it depends on the circumstances. There's a large local builder that's great. They have a preferred lender. They don't force it. You can go get quotes wherever you want and they still give you the full credit. They don't take anything away from you for using who you want to
Oh, I
use,
think that's
which is
great.
great.
No, I think that's so valid is that the new construction and all of their offerings offers another potential avenue to go down that might help you get a good deal, but obviously do your due diligence. Always
Right.
do the price comparing, looking at those monthly costs with multiple different lender sources and seeing truly which one is the best deal. So I think that's great. Is there anything that might be different on the client side in what they have to go through the process of getting their loan clear to close depending on the type of situation, whether it's a resale or custom building a home?
So custom build completely different, and that really depends on the builder. So we have national builders. Obviously,
Yep.
these are large companies. They own the land that they're building on, right? Because they're doing whole subdivisions.
Yeah.
They own the land, they have the capital. They can sit here and build all these homes and then go ahead and sell them once, almost constructed or already constructed. And then you have smaller builders, maybe even some mid-level ones who will be more custom design, custom home, who might not have the capital to finance the whole project.
Mm.
So if they don't have that ability, then you're going to a lender. And I will say, like banks, there are some few local banks that are really great for this, doing new construction.
Mhm.
So that looks different. You go in, there's different qualifications, bigger down payments, and then you're looking at like doing draws. You can do a one-time close, which basically they finance the whole project and then close a loan like normal at the very end once it's constructed and the appraisal's done. So there's a few different ways to do it. When I have people who go through this, doing construction loans for me right now, I don't see it offered a ton on the wholesale side. It's just
Okay.
a level of risk that the wholesale lenders are not willing to take right now. So I'll refer those people out and then let them know once you're past the construction piece of that and receiving the draws, essentially you're coming in and financing it at the very end to pay off the construction loan.
Okay.
And that's where, my rate is going to be in their best interest at that point, right? Than taking the higher costs going through a larger company.
I think what's really interesting is that I feel like people will often think of, okay, I want to custom build a home, and they think of all the expenses into the actual making of the home, but maybe they're not thinking about how the loan side is
And
affected.
who's paying for those things to be ordered and
Yeah, and
put
this
in.
this might be obviously too because there's so many variables, so this might be a hard question to answer. But in general, would you say that more of those construction loans tend to be a much higher cost to add on to the transaction? Or relatively they end up kind of the same as like a move-in ready home, it's just different way it's set up?
You're probably looking at a higher rate
Okay.
on a construction loan, and again, it depends if you're doing a one-time close, which would be, everything's getting done and you're only financing it once.
Okay.
Or you can go in, present your construction, plan to the bank and get a loan just for the construction piece.
Mm.
And then once the home is completed, you're getting the appraisal and then basically doing another financing at the end to a permanent rate. There could be
Yeah.
higher cost to this.
Yes.
And essentially with mortgage, it's all about risk. It really is. It's all about risk level. We have all these loans. I mean, if you have a 680 credit score and 20% down, you can get a loan anywhere. It might
Mhm.
cost you more,
Mhm.
but you can probably get a loan somewhere.
Yeah.
So it's just looking at those layers of risk. I mean, what if you have, subcontractors who are working that project and then they walk away?
Okay, let's move on to one awesome strategy called delayed financing. This is really great if people do have enough cash on board, they can use this to save money. So, obviously I would love for you to explain this in detail, but typically it's coming in with the strategy of coming in with a cash offer. From a real estate perspective, I love it's the most powerful offer you can do because you can control tight of a close
Right.
you can have. You can waive the appraisals. You don't need to do those technically unless you want to. So, just from the sake of coming in with a strong offer, I love coming in with cash, but there's more benefit to that. So, do you want to
Yeah.
explain a little bit about delayed?
Well, yeah, and like in today's market, obviously we still have higher rates. Historically, obviously
Yeah.
we're pretty neutral here, but
Yeah.
people who are used to the COVID era
Yeah.
financing, it's great because you can come in and if you have, let's say you sold something in another state, you have $400,000 and you come in and you're purchasing something for 400. Close it in 2 weeks, however long you want to do. I mean, that's up to obviously negotiations. I think it's great because you can negotiate probably a better purchase price at that point
Yeah.
for somebody coming in with all cash. And then the other part of it for me is people who have that kind of capital, generally they know a little bit more sophisticated, I would say, at that point, where they know having cash on hand and investing are also important things, not just owning the home. So for those types of people, they can come in, give the 400,000, and let's say within 6 months they can have the opportunity to come back and essentially finance it as a purchase. And the important part of that is financing it as a purchase, even though most people think, oh, that's a refinance. Well, that's the whole point of delayed financing, right? There's
Mm.
certain elements to it. We have to prove that the cash was yours. You can't borrow that money from anybody. The cash
Okay.
has to be yours. You have to be really specific with how you take title. So I never suggest having like anybody who's not going to be living in the home or anything like that on title. It can create problems. But like I said, you have up to a 6-month window to come back and essentially recuperate that cost and finance whatever amount it is that you're trying to get back. You can prove the amount that you've spent on closing costs and add that in there as well, and then finance it to get some of the cash back. When you're looking at a refinance versus purchase, the interest
Mhm.
rate is different. So most people just think, oh, it's a refinance, I can do that at any point. Well, yeah, that's great, but you're probably half a point higher in the interest rate just simply because it's a refinance.
Okay.
And in that scenario, it would be a cash out refinance, which is even more expensive to do,
Yeah.
even higher interest rate.
Right.
So being able to get that done within the 6 months and hopefully, you see a little bit of a rate reduction at that point too. But for some people, it's worth the risk of waiting the market out.
Well, I think especially right now because there is from what I've been doing my own research, and you might have different, obviously, being in the world of lending, I would love to hear your take. But as far as predictions of next year, one great podcast I was listening to was essentially saying they might dip into the fives briefly,
Mhm.
but they predict that it's probably gonna stay in the low sixes. I haven't heard much talk of it being going like crazy higher. I would love to hear your thoughts on this. So, but if that is true from a prediction standpoint, I think that could be a great strategy because you could pay cash and hope that in within that 6 months, it does that little dip and then you go and get it,
Mhm.
you know? But
Yeah.
let me know kind of in your world, what's the most accurate prediction you're seeing when it comes to rates?
I've stopped listening to
I know.
predictions.
I know.
God bless Barry Habib, but I stopped listening to him a long time ago, May 2023,
Oh my
when, he said
gosh.
rates were gonna drop. And
I
in
know.
this industry, it's hard because we did have so many predictors
Yeah.
to tell us where rates were going to go.
Right.
I mean, at least in my family, I'm born and raised in real estate, so all of us are involved in the business.
Yeah.
One of the best parts of that is my dad loves to get up really early and he'll watch the news and, go through all these market watches and everything and briefs us each day about what's going on. But the indicators that we used to be able to look at are no longer doing what they're supposed to do to the interest rates.
Mm-hmm.
So it's kind of a predicament, I would say. And that's kind of why I always tell people, if you find a chip on the floor in Vegas, are you putting it on red or black, or are you putting it in your pocket?
Right.
And I heard that from one of my other lending friends. He gave me that. So thank you, Jeff. But it's a great example because, okay, are you willing to take the risk of waiting, or do you want to lock right now and know, even with financing a regular loan, not even delayed financing, do you want to lock your rate right now?
Yeah.
Or do you want to take the chance that they may come down in 30 days?
Right.
And I try my best at this point not to advise any longer. I can give all of the information that I know and
Right.
have, and just how the last couple of years have gone, and just give thoughts.
Yeah.
But I tend to let the client lead.
I feel like a smart strategy, though, is to assume the worst, or assume the conservative. Like, assume that we're not going to be getting crazy low rates.
Yes.
And what would you plan for that? And if it does, great. It's like, I was just talking to a client who is sort of waiting for a refinance.
Mm-hmm.
And I did mention the one podcast that I listened to. And I was like, if you just default to being really ready, if it does go into the fives, I would probably take advantage of that.
Yeah.
And not assume or hold out for any magical COVID rate thing to happen again, because that is not.
COVID's not going to happen again.
Yeah, we don't predict markets, but that's probably not going to happen
probably
again.
not going to happen again.
Also, one thing about rates that I also find really interesting is that, for example, there's an app that I would say almost every agent that I know looks at, Mortgage News Daily, if you have it, which talks about the national rate.
Yes.
This is the rate that everyone in the news, when they're watching the news,
this is
gets.
the national average.
So right now, 30-year fix in my app says 6.24%. And what I find interesting about that, people see that on the news, or they read about it in the newspaper, and they're like, oh, these are the rates.
Those are my favorite dad calls.
Yeah.
Those are my favorite dad calls.
I remember when I was a very, very new agent having like one of my first conversations about rates with you, and you were like, I'm like a point lower than that. Or like, it was just some sort of conversation where I was like, whoa, it's not just a blanketed rate. Like, this is the rate. There's so much nuance. Going back to the seller credit of buying rate downs, or brokers or every lender might have a different rate.
Yep.
And then obviously there's more factors in the rates that go into the monthly, like we've already talked about. The builders and their rates with their lenders. There's just like so much to this that there's almost, I don't want to say no point. It's generally, okay, yeah, track it. We're in the low sixes. That's why when people ask me where are the rates, I don't ever say, oh, we're 6.19%. I'm like, we're about low sixes, high fives. Like, you know.
And it's better. I mean, for agents, you guys should not have to even go down that route. It's like, here's who I would call and ask.
Yeah.
Because it's so many different factors. And like an example, I won't even say the name of the company. There's a large local lender here that mass emails agents. I don't know if it's weekly, every day, whatever it is. They're mass emailing that information out.
Yeah.
The national average. Their rates are actually 2 points higher than that. So it's like this, I don't want to call it a bait and switch, but almost it's, okay, let me pique your interest.
Right.
Now you're going to use me for lending.
Right.
And then when I get the client in the door, it's, oh, well, sorry, you're only putting this much down. So the rate, it's in it. I hate saying like, oh, I've been doing this for so long. I've been around it for so long.
Right.
I have been around it. I started processing loans really young. I was in high school. I've been around this business long enough to kind of see the different like tactics behind what's going on. I truly didn't understand it until I went and worked for other companies. I've always been with my mom. When we relocated here, I had different experiences. So I was able to kind of understand how and why they're doing the things that they're doing. And it's all business driven. So it's different. But when it generally comes to the rate, I don't even watch the news. Don't even watch the news. And I had a client, this was, man, I think at the beginning of this year, maybe last year, the dad was very involved in the transaction, which is great. He has life experience. He's helping the kids. And it's hard to blindly trust, somebody like me. I understand that. So I'm never offended when somebody's dad calls me. Like, it happens a lot. So I had locked them in. I had watched some of the more recent predictors of the rates, and I locked on a pretty good day. They got a better rate than what we talked about, and then the rates went up a week later. Well, I have the dad calling me going, well, I'm watching the news and they're saying the rates are lower. So we need the better, and this is a week before closing.
Right.
We need the better rate.
Right.
We need the better rate. And I'm looking at my rates, comparing from the day I locked to that day. And I'm like, what is he? They're $500 more for the same rate. Like, I don't know what he's talking about.
Yeah.
I'm like, where are you seeing, what
Yeah.
are you watching? And
Yeah.
it was the news.
Yeah.
And it's just, it doesn't, the same thing with the feds. Everybody thinks, oh, the feds cut the mortgage rates.
Yeah.
They went up.
Yeah.
They've gone up every single time because it's not just the feds lowering the mortgage rates. It's what is the economy doing? What are jobs doing? CPI, all of these things. So yeah, Jerome Powell might stand up there and say, we're lowering mortgage rates a quarter. But then he says, whatever about something else. Now the rates are going up because that affects it. So his comments have not helped our industry. But yeah, hopefully we'll start seeing some more stabilization. I think if that's the biggest thing for most people right now is the ups and downs.
Right.
If we
the
could just
volatility.
have,
It just makes everyone feel I've been telling people that for me, what I'm seeing is like it is the time for buyers to negotiate.
Yeah.
But I also have so many conversations that people are just terrified of the uncertainty. And so they're at least waiting till spring or the end of the year or till rates get better. There's just so much fear when I'm seeing all my agent friends buying properties.
Right.
Like this is the time. This is the time. I don't want to say this in a way to start telling everyone to go lowball offers. This has been the most price cuts I've seen. This has been the most delistings I've seen. This has been the more conversations I've had with listing agents willing to negotiate.
Yeah.
Anyway, so yeah, it's a killer time, but I agree because of the news and because of everything, people are pretty terrified right now.
Well, yeah, and like nationally versus Boise, two different things.
Totally different. We're so unique.
Boise's a very strong micro economy.
Yeah.
And we see that every day. You have Micron, you have all
huge
these
expansions coming.
in Californians, we're all still coming here, right?
Yeah.
We're all still
North Cal,
coming,
SoCal.
We're all still coming here, and that's not going to stop because people are coming here for whether it be political, religious, whatever reason they have, they want to be here.
I just did a monthly report on the BRR stats, and they're estimating 400,000 people in the next 10 years.
Yeah.
To come to Idaho. Yeah.
And that should tell you, for buyers out there, this economy just Boise, strong economy. I don't see, and I don't want to predict it, I don't see a decline. I mean, I see a leveling out, maybe a plateau.
Yeah.
That's pretty normal for wintertime anyway. We always see this.
Right.
It slows down. People are celebrating holidays. Even when you're talking about delistings, it makes sense. People don't want people walking through their homes.
Yeah.
When they're trying to celebrate Christmas or doing whatever. So it makes sense. It shouldn't scare anybody. Nationally, sure. Like there will be certain markets that take a hit.
Right.
And we'll watch that play out. But I don't think anybody should be afraid to purchase a home here. And you can change the rate. If the rates do drop, you're refinancing.
Yeah. Yeah. No, I agree. I do think we live in a beautiful bubble here in the Treasure Valley because of the influx of relocation people and because of the massive expansions, whether it's going to be Meta or Micron or all the Costco's coming up.
I'm so excited.
I feel really confident knowing that just by holding my property, the equity just grows stronger than a lot of other markets. And if I had to resell, taking a loss on that's going to be much lower than I think in some other markets. So yeah, that is one thing it makes it a really safe investment here in Boise. Okay, Bri. So to wrap up this amazing interview, what is kind of the one takeaway that you would want people watching or future buyers here in the Treasure Valley to just think about when it comes into being financially strategic going into next year?
That as soon as you can afford to buy a home, you should be buying a home. Because that's one of I don't think people look at a home as an investment. And it was actually when I was buying my first home, oddly enough, I was not in lending at that point. I was dispatching. And even though my mom was doing my loan, I had this moment of panic of, oh my gosh, can I afford this payment? This is, I'm giving them $15,000 down payment. That was money, I worked really hard for and saved for a long time to get there. And I remember one of my sergeants coming in and, older guy, and we were sitting there talking about it. And he's like, Bri, your house is just a giant savings account.
Right.
That money isn't gone. It's not gone. Your down payment is your equity. That's an investment into the home. Yes, it's locked up, obviously, in the home. You would have to refinance or sell it to get that cash out. but it forces you to save money
Yeah.
to a certain extent. And it is, no matter what you do, especially for first-time home buyers, even people who are buying like their first investment, it is a scary process. And it's going to be, you're going to question yourself multiple times. If you don't question yourself, you're not normal at that point. And I tell my clients that, they'll call me and say something and it's like, no, you're good. You're
Yeah.
fine. We're going to hold hands. You're going to
Yeah.
be okay. Like, this is a lot of people will ask that. Is this a good investment? What do you think about it? And it's always there. I guess I shouldn't say there's never yes, there's bad real estate investments.
Mhm.
Buying a single family home here in the Treasure Valley right now, realistically, it's going to be hard to really have a poor investment unless
Right.
you're buying something that's already upside down or needs a ton of work, whatever it is. But whatever you have to do to get your foot in the door, prices are never really going to go down,
Mhm.
right? They're going to keep going up. It's supply and demand, basic
Yep.
economics. A lot of people are looking at Idaho. A lot of people want to be here.
Yes. Yeah.
Don't see prices ever really coming down,
Yeah.
right? And the rate is changeable.
Right.
You can refinance that later. And
Yeah.
I'm not going to sit here and what is it? Marry the home, date the rate. I hate that. Because some people it truly doesn't make sense, right?
Right.
But I always go back to like, especially with us millennials, the whole avocado toast. Have you seen
I feel like
the
why does that sound
memes?
so familiar? Okay, say it
You
again.
just see it on social media all the time where it's like millennials complaining about home affordability and they're, me not buying avocado toast every day or this $7 latte.
Yeah.
I'm still not going to save enough
Yeah.
to buy a home.
Yeah.
So why do it? And it's like, okay, yeah, correct. However much $10 you're spending on breakfast every day, you might not be saving enough for down payment, but it's the mentality.
Right.
It's the mentality. And if you're willing to just spend money all the time because it doesn't matter, how much are you actually spending? Are you paying
Mhm.
attention? So I think we kind of lean too far that way of like financial irresponsibility. It's
Mm.
not necessarily the avocado toast.
Right.
It's the mentality behind what can I sacrifice now to help me in the long term?
Oh, yeah.
And real estate is one of the historically,
Right.
I don't see '08 happening again. Historically, it's one of the best and safest
Mhm.
investments you can make is in real estate. So make the changes now in
Yeah.
your life. And I bought my first home. I got a roommate. But guess what? My roommate was helping me pay my mortgage. And that
Yeah.
was, paying down my loan. So it's just, what are you willing to sacrifice for the long term?
I love that. So if you can afford it, get in. And I love that I feel like you're bringing up the point of almost removing a little bit of the emotional attachment to it and really view it as an investment,
Mm-hmm.
which I do think we're sort of raised to be like, okay, we grow up, we get married, we get a house. That's just like what you do.
Right.
And it almost removes the fact that these are strategic financial decisions.
Well, right. And you look at the amount of women, the single women that are buying homes,
Yeah.
the percentage there, that's crazy. And you don't need to wait to do it is my point. We don't need to wait to have a ring or children or whatever it is that you're stuck on. It's an asset and it's going to appreciate value. You're going
Right.
to make money off of this at some point. Maybe you have to hold on to it a little bit longer. Maybe you're looking at 10 years versus 5. Whatever it is, you still have to live somewhere.
Right.
So unless you're living completely rent-free in your mom's basement, you have to live somewhere and you're
Right.
going to pay to do it. So would you rather pay off your own loan or would you rather pay somebody else to pay off theirs?
Absolutely. Thanks so much, Bri, for coming
Yeah.
in. You're awesome. All right.